Hey guys, Brian from Bear Bull Traders here. It is May 12th on Saturday. A little late on the post. Usually try to get those off on the same market day, but today I'm going to talk a little bit about what I do or what I go through when I'm looking for my watch list. This is in response to questions from a number of people about the process I follow. So I'm just going to spend a little time talking about that before I go over the one trade I did. And apologies, this may be a little bit longer than normal. But yeah, basically my pre-market scan. First off, I'd just say I do favor short positions, going short on an opening range breakdown versus longs. I just tend to find them a little more predictable. And first thing I'll do in the morning, even before I get on the chat room, I'll do a pre-market scan or do some pre-market research, which I get a few emails from Benzinga and CNBC giving a little bit of a pre-market overview, and I just read up on those a little. It takes me a couple minutes, and I just read those and just to get a sense of what's going on in the market, what's in play, why is it in play. Um, I don't know. I know Andrew doesn't like to do that, but it's just my personal preference. I just like to know what's going on, and I go through the same process pretty much that Andrew does. We look at the trade ideas scanner and we look at our gappers watch list. So I'm looking and focusing more on the ones that are gapping down as opposed to the ones that are gapping up. And the other place I look for opportunities to trade is on my personal watch list. And I've mentioned this before. I do have a sort of a personal watch list that I keep, and I just base it on stocks that are currently in favor or currently being played, and that's stocks drop off it and come on it just based on what's going on. I mean, we were playing MU for a while there, and it's still on my watch list. That kind of stuff. So I've got about a dozen stocks on there that I like to go through as well and just see what they're doing. But typically, what I do is I look for gap downs on the TI gappers watch list. 5 to 10% is like ideal, 50, even if it's 15 or 20. I mean, they all seem to, if they're gapping down that much, they all seem to fail more at some point. And, Semantic was a one that on Friday really, it started out low, really extended and it went lower. So, yeah, so anyway, but ideally I'd like, I like to focus on the 5 to 10% ones to start and drill down and look at those. So the one thing I got to watch out for, and I'm just going to mention this, is you got to watch out for stocks that have a high level of short interest, because that can really affect how a stock's going to trade. TTD, I think, had a really high level of short interest. If I'm not mistaken, I think it was like over 30%, and it was gapping up, and that probably was one of the catalysts that drove that thing higher right at the open. And if you've got a stock that's gapping down with a large short interest, you have to wonder if, a bunch of the shorts are going to jump in and start covering on a big gap down. So, there could be a pop there. So I tend to find the ones with a high short interest a little bit more volatile, especially at the open, but could be predictable as well. So anyway, I just the other thing I do just prior to the pre-market or prior to the market open, especially in the pre-market last 5 minutes, I do tend to watch the price action to see how volatile it's going to be, and that kind of, if it starts to get a real volatile before the market opens, then I'm going to sit back and wait a little bit and see what happens, as opposed to maybe seeing a stock start to drop right away and kind of jumping in. So kind of watch that last couple minutes before the market opens. So, and of course we go through the same thing. We go through find levels, pre-market lows, pre-market highs, look back in time, see where there's previous areas of support and resistance, and get a sense of where we're going to enter and where we're going to exit, and that kind of stuff. So that's basically what I did, or what I do every morning. And there really wasn't on Friday. There really wasn't that much to trade off of on the, at least from what I looked at, there wasn't really that much to trade off of on the TI Gappers watch list. So that's when I went to my personal watch list and I came up with IQ and IMMR, I think was the other one. And the other thing I do, I'll mention, is that you probably noticed that I don't, Andrew's watch list can be six, five, six, seven stocks. I tend to focus on two, maybe three at the most. And I just find it's easier to manage a couple as opposed to five or six. And especially if you're a new trader, you can really get overwhelmed by trying to watch too many stocks at once. You're better off trying to focus your attention on several stocks that you think have the best opportunity. And they may not work out, you may miss out, but yeah, I think that's a better strategy. It's a better strategy for me. And Andrew seems to do fine focusing on five or six. Again, this is all about you developing your own personal style. So let's look at IQ and how that panned out. Here's the IQ day, 1 minute. Let's look at the daily first. You can see here, it's in the last couple days, this is a daily chart of IQ. It had a nice pop here, had another nice day, but it's a long tail on right here. And then it gapped up. And I kind of thought, at 3 days gap, that's probably getting extended. And that's what made me think, okay, maybe it's kind of weird, but it's gapping up, but maybe there's a short opportunity here. So that's kind of why I got interested in this one. And let's take a look at the daily. So you can see here the pre-market action is kind of steady. This is your pre-market low here. And so the open thing jumped up. I wasn't going to take that trade. I just wanted to see how it all panned out, and it kind of stalled out here. So I just kept focusing on it because that was I had that in IMMR, I think was the other one that I was watching. So I was looking for a breakdown of sort of this level here. And when I saw it starting to pull back here, I kind of felt like it was either going to bounce from here or it was going to, punch through there and go lower. And so when it started heading down here, I got a short in, and a little bear flag or here didn't really make much of a flag at all, and it just continued lower. So I think I covered it right down in this area here. So that was kind of the rationale. But this one I had to sort of sit back and wait for it to resolve. It took 6 or 7 minutes before I did an entry on this thing. So anyway, that was kind of the rationale behind that trade. Like I said, I didn't find much else. I could have traded TTD, for an opening range break up. And I know some of the other people in the room, I think Brendan maybe traded it. And so that was a nice opportunity that I did miss, just because I guess I had always have a bit of a short bias for the opening range breakdown. So anyway, that's it. So I hope that gave a little bit of insight into what I do in the morning in terms of building my own watch list. And, you can use whatever you think's valuable in that, and will develop your own style. So guys and gals, have a great rest of the weekend, and we shall see you in the chat room on Monday morning. Have a good weekend, everyone. Bye for now.